Hi, this is Shelley Kraft. We're coming to you live on SNNLive. We're at the Cambridge House Toronto Resource Investment Conference 2012. With me right here is Mickey Fulp, the mercenary geologist. Mick, how are you, bud?
I'm doing well. I'm busy.
How was your summer?
Slow.
For most of the juniors, too?
Yeah, well, and my summer wasn't really slow. The market was slow. I was busy. I was running around in various places looking at projects and trying to position myself for what I thought would be a rally after Labor Day. We talked last in New York in the mid-summer, early summer, I suppose, and we said didn't see any catalysts on the horizon before Labor Day, and Labor Day came, and people come back to work, and volumes go up, and capitalizations go up a bit, and then Draghi and Bernanke did their deeds, and price of gold went up, so it looks better. It's about what I know. It looks better than it did 3 months ago.
Okay, so let me set the stage. It's late September. There's a pretty substantial election coming up in the States. How does that affect our sector, the junior sector of the market?
Tell you the truth, Shelley, I have no idea.
Let me move on to the next question.
Because I'm a libertarian, so you can take Obama and you can take Rom nuts and out of the equation. I'm going to vote for Gary Johnson. I got to vote my heart here, and we'll see what happens. You know, it's twiddledee and twiddledum as far as I'm concerned.
So it has no effect on the market?
I'm not saying that. I just don't know what effect it has.
So here's my thinking, and let me get your opinion on my thinking.
Okay.
All right, we're in the fourth quarter. Numbers are going to be pushed up. You know how it goes in the fourth quarter in the market.
All right.
Does the movement up in the fourth quarter have a trickle-down effect, in your opinion, for the juniors?
Well, I think anytime major markets move up, that implies there's some risk returning to risk appetite, let's say, returning to the market. And we're kind of down at the bottom end of all this with the highest risk and potentially the highest reward, but this is speculation. So when venture capital moves into the market, when smart money starts to move in the market, into our market, that's encouraging. One thing that's encouraging to me is the smart money is starting to do private placements. I don't know if you notice this, but the heavy hitters in our business, we don't need to name them. Sometimes they speak at these conferences, but these guys are starting to put money into some of the beat up juniors into private placements, and that's encouraging, along with the idea that quantitative easing is going to make the price of gold go up because dollars and euros get devalued.
So you've at one point loved uranium, at one point you've loved graphite, at one point you've loved gold, and at one point you've loved silver. Now the reason why I mention that is because you don't always love them, because they fall out of favor after a while, so you ride the tide. So if you had to choose, which one's next?
Uranium. I'm a long-term uranium bull. These uranium companies have been beaten up unmercifully. That's buying opportunities. Now, we have seen some movement in some of the better uranium companies or the more advanced. The developers, the producers have started to move up a little bit. But then a major brokerage house just downgraded the outlook for uranium yesterday. I don't know where that falls, but all in all, this is a long-term view of mine that the uranium industry will succeed in the mid to longer term, and I'm positioned. I buy stocks when they're unloved. The thing about being a contrarian, sometimes you have to have a lot of patience. I first called the uranium move up in January of 2009. It took till August of 2010 for that to happen. More than a year and a half. I'm patient.
Question. We recently heard that China's program for nuclear energy is growing by, giant size.
Leaps and bounds.
What's your thoughts on that?
Well, this is what's going to drive the uranium business, and that's demand from Asia, Eastern Asia, China, India, Korea. Japan's out of the equation now. We don't know what they're going to do, but but we don't really need them. That's going to take about maybe 8–10% of demand off the market, but that's going to be replaced in the midterm by the commitment of many countries, mostly in Asia, but even the United Arab Emirates are going into nuclear. Saudi Arabia is going to build nuclear power plants. The Russians are positioning themselves to be the kingpins of the uranium industry. Hell, they own the majority interest of the largest uranium mine in the United States in Wyoming. So you see
Look at the pressure
happening.
on coal.
Yeah, well, the pressure on coal is coming from natural gas, a beat-up natural gas price. But all in all, if you have patience, if you're willing to wait, this is a very good time to position yourself, in my opinion, in some low-priced uranium equities, and I've done that over the summer.
Ladies and gentlemen, we need a website.
mercenarygeologist.com, bilingual Chinese, mercenarygeologist.asia, and Twitter account @mercenarygeo. And not only that, but you can hear streaming audio 24/7 on my radio station. This interview will be on that at some point, mercenarygeologist.fm, although you're not going to be able to see our faces. That's a radio station, but it still works. Yeah, we're not the pretty one here is behind the camera, okay?
Ladies and gentlemen, Mickey Fulp, the Mercenary Geologist. We're at the Cambridge House Toronto Resource Investment Conference 2012. Mick.
Always a pleasure.
Always a pleasure, my boy.